Good evening, everyone. My name is Dwayne Kimball, owner and founder of KMD 89 VA Claims Consulting, United States Army veteran and retired VA rating specialist. I'm here with David Piatak, VA Housing Education. How you doing, Dave?
I'm living the American dream, Dwayne. Just happy to be here and answer questions around the VA home loan. It is a hot topic right now. And everyone that even has a place now are wondering what they're going to be doing. So thanks for having me.
Yeah, appreciate it. Appreciate it. This is what our third, third,
Third or
third,
fourth.
third. Yeah. Then we got one next month right before Christmas. So definitely excited about it. I know I see some people. I went live last night and I saw one individual has been on here a couple of times, and I was like, "Hey, I remember you. You ready to get that house?" I think she's in Texas and lives in Louisiana. So yeah. So tonight for an hour, we're going to go through. We're going to take some questions, some VA compensation questions, a couple, and I want to give David a little bit more time because I know some of these topics, and Dave, you and I talk quite often, and you're like, hey, I can do a whole hour in this presentation. So I want to give you a couple extra minutes so we can get through this stuff. But people understand this is not one and done. We're going to do these regularly. I think we did one at one time during lunchtime. Did we do one like 1 o'clock during the day or something like that?
You know
But
what? I'm not sure.
okay. But leave a comment in the comment section and let us know what time of uh, the day of the week that would be most advantageous for you to sign on and spend some time. I'm thinking anytime. You're giving out free information like this. If it's 12 p.m. during the day, then hey, I need to take some time and away from work and jump on here and get this good
As long
information.
as long as it's not midnight, we're good.
Yeah, I know, right? So I'm going to go ahead and I'm going to leave David's calendar, the link to David's Calendly, so you can schedule a one-on-one consultation with him. I just drop the link in the comment section, and I'll drop that periodically during the night. I'm looking at his schedule. He got time. He has some time tomorrow, Monday, Tuesday, Wednesday, and next Thursday. So definitely schedule a time with him. So, Dave, I'll go ahead and turn it over to you. I know you said you want to talk about a couple of things that we talked about last
Yep.
month, and you got some updates on it. Go ahead.
Awesome. Yeah. So there's some big. Last time we talked, there was some things in the pipeline with the National Association of Realtors and a lawsuit coming down, and they actually ended up losing on Monday. And so I kind of want to recap what that means because it is pretty significant for the veteran community, and I don't hear anybody talking about it. So in essence, right, when you typically buy a property, you use a realtor. That realtor gets a fee from the sell side for their services, right? For basically bringing a buyer to the seller, they pay a commission to the buyer's agent, right? That's how it's traditionally been done. Now, that's the issue. That's the lawsuit, right? That they're technically shouldn't be responsible for paying for a buyer's agent fee because they're basically inflating the price, right? That's kind of like the basic gist of it. And so what's going to happen, and this came into effect as of yesterday for a majority of multiple listing services, right? So when people want to list their property through a realtor, they list it on this multiple listing service, and then it syndicates everywhere, right? You go to realtor.com, Zillow, Redfin, they have access to this MLS system. That's how the data is pooled. So they're saying now that potentially, because it just got, it just happened, is that buyers will have to pay agents a fee if they don't get paid a compensation from the sellers, right? So you can imagine, Dwayne, is that if I have to hire a realtor, and let's say I got to spend an extra $10,000 to hire them, that's a huge consideration, right? Most people don't have 80% of Americans don't have $10,000 laying around just to dish out to be able to hire someone for that, right? And then furthermore, as a veteran using the VA loan, so right, it's only when you use the VA home loan, you cannot pay a fee to an agent for real estate commissions or for services, right? It could only be covered by the seller or it can be covered by the lender, but rates are already high now, which I'm going to go into why it is the right time to buy. Probably like, well, why would you say that? And then that statement, I'm going to explain it. But if it would go even higher, if a lender would have to give a credit to cover those costs, right? So that, right? So that in itself, Dwayne, if I asked you to help me, but you knew you were going to make no money, would you help me? That's the problem. And that's where I think veterans are going to have a shortfall. And I don't think it's going to be immediate, even though this just was implemented. I think it's going to take probably till mid next year or a little bit past that for people to start maybe dabbling in it. Again, the big challenge is that most people just don't have a bunch of free money laying around to be able to pay that. So there's a lot of talk in real estate about reducing fees for like what they do. But again, like, as you know, working with the right team does make a difference, right? People on here may have bought homes before, have sold homes, had bad experiences, right? Because top 20% are the ones who do most of the business, and they're on top of their game. So it's just kind of unfortunately kind of what's happening in that space right now. But it's still a great opportunity right now. Do you want me to kind of just roll into that piece?
Yeah, go ahead. Yeah, go ahead.
Yeah, so it's kind of like the best and worst time to buy. It's kind of like it's kind of a combo deal on that. But the reason why I say right now is the best time to buy, because a lot of times, right, people sideline, I'll buy next year when rates drop, or when prices drop. And guess what? 2000 to 2001 is the prime example of that. Rates are at 2.25, but homes were going 100,000 over value, right? People just were like, I don't want this. I'm not going to pay over asking price. I'm going to wait. They wait. Rates are at 8% and values are still higher than they were at the 2.25, right? And it's still somewhat competitive in certain markets. The difference is that the longer you wait, the values historically continue to go up. And when people are like, I'm going to wait until next year when rates drop, guess what happens when rates drop? Values go up, and it negates what you're trying to do. In fact, your payment will still be higher because the balance of the mortgage is going to be higher, right? When you think about, and this is what I think a lot of people don't understand about the VA loan and the power of that. When you purchase today, whatever rates are, right, you really have to go into it knowing that you can afford it, right? Don't go in thinking like, oh, I'm going to be house poor, I'm not going to have enough money. If you can afford it is what I'm talking about, right? Everyone should know how to, everyone should have a budget in place. I'm going to be doing a bunch of classes on that in the next coming of months of just like understanding the budget. I just did one for a military group just recently, and it was just kind of eye-opening because I had to think through on how I do it, and like what mindset goes around that. And it was kind of like, I'm like, I kind of understand it a little bit better. So the thing is with these VA loans and how they work, right? So if you buy at today's market, let's say they're 8%, and 6 months later rates drop to 7 or 6.5, you have the option of what's called an interest rate reduction refinance loan. People that have VA loans, even if they turn them into investment properties or second homes down the line, can utilize this interest rate reduction refinance loan. It's literally the easiest thing in the world. There's no appraisal. They just verify you have a job. So disability would count no matter if it's 10% or higher. They'll still use that as your proof of income. You just need a title insurance and a homeowner's insurance and a mortgage statement, and you're closing on the mortgage, right? And you can do that unlimited times. So that's kind of the cool part with the VA loan. There's flexibility in that. And you can also do VA assumable mortgages where you can assume another veteran's mortgage that has 2.25 interest rate. So you got a lot of options to be able to be a homeowner, especially if you're thinking about it, right? We're not saying like, hey, you need to buy a house. Like if you're thinking about it and you're serious about it, I would do it now because you have November, December, January are the worst times to sell, right? The absolute worst time. But when is it the best time then for? It's the best time for buyers because literally every single person we have under contract right now has all closing costs covered by the seller, and they're giving them a credit to cover closing costs. No, all closing costs are covered. They're giving them an additional credit to buy down the interest rate. So it's a kind of like a win-win. But as soon as the spring market hits, that's going to be around May, it's going to be over. Like people are not going to be able to get into contract. They're going to have to waive all types of crazy contingencies. It's mind blowing that they can even do that, even with VA loans. But there's a lot of finite details on things that you can do. Like you can buy as is properties with VA loans, and people are like, how is that possible? Well, if you guys have an extra 45 minutes, we can go over each subject. But I'll just kind of broad stroke any of the questions you guys have. And then, like Dwayne said, like the best thing to do, because everyone's situation is unique to their own, right? You can have same credit, similar job history, but how you get paid is different, or the line of work that you're in, how your bonuses are going to be looked at, how overtime looks at, or you work a part-time job along with your full-time job. You have a self-employment. All of that's going to shift in that, in how a lender's going to look at it and how we're going to be able to assess that to maximize what you can do with your VA home loan benefits.
Right.
I know that was a lot.
Yes, thanks for explaining that.
Yeah.
Because it's so real quick. So just so I understand, the buyer, if I'm selling my house, my agent, I had to pay them 3% as a selling agent, and then the person as the buying agent 3%. But the buyer agent no longer gets that 3%. The buyer would have to pay that to that buying agent, right?
So the reason why they got in trouble is because they were like, "Oh, this is how it works." Right? They're like, "Oh, you pay us 6%, but we might keep 4 and we give them 2% or whatever, right? Or 3 and 3%."
Mhm.
Now, when you're going to list your property, they're going to ask you, "Do you want to offer a co-op to the buyer's agent?" So now you don't have to pay 6. You just give them 3 or 2 or 1, whatever you negotiate. And then if you have a buyer that comes in with their agent, then that buyer will be responsible for paying their agent for their services.
Mm.
Unless it's a veteran and you're not offering a co-op, then the veteran doesn't pay them and they don't get paid. They do it for free.
Oh,
And
wow.
that's the challenge, right? Is that I just don't know the legalities of, let's say, only showing properties that are offering a co-op, right? Because a lot of people do need agent services, especially good ones, right? You definitely know the
Yeah.
difference between a good agent and a bad agent. Same thing with lenders, right? There's dime a dozen. I think right now, industry wide, between the real estate and mortgages, you're starting to see it's starting to thin out a lot because people it's a rough market. They're not closing as many deals. So a lot of people are leaving the industry, which I think is a positive sign because there's just literally it's crowded,
It's
but
saturated, yeah.
saturated and like people doing 1 or 2 deals a year. You don't have enough experience, right? Like if you never did a VA claim in your life and just popped on and said, "Oh, I know I can help you with you guys," people are they're gonna laugh, right? So it's kind of like the same thing. It's like you're an expert in what you do, and you need experts in what they do to kind of facilitate that. But yeah, to your point, Dwayne, is that that buyer would have to pay their agent to use the services. But again, I think it hurts a lot of people, even if you're making 100,000 a year, just to be like, "Hey, I'm going to pay X amount of money just for an additional service."
Right.
When you can search a lot of the stuff online, but negotiation is a tough part. You don't know properties, but some people, they can do it themselves. Then they'll still be okay.
Right. Okay. All right. So thanks for explaining that, David. We're going to go ahead and get into a couple of questions here. LJ, I did read the other 3 questions that you put up. But this one, LJ says, since current status of HLR claim is DTA, means duty to assist for federal records, can I still withdraw the claim? The answer is yes. Like I explained last night, you can withdraw a claim as long as the decision has been made. So the best thing to do is call 800-827-1000. Say, hey, I'm thinking about withdrawing my claim. Has a decision been rendered? If the answer is no, tell them, hey, annotate on 0820 that I would like to withdraw my claim. And you can follow it up with sending it in 4138 saying the same thing. Okay. And this question is for you, David.
How do you look at debt to income ratio or only review applicants VA loan summary sheet? So I saw that question a little bit earlier. So thanks for dropping that before the call. So I took a look at that sheet because I'm like, I wasn't familiar with it. So this must be like a loan sheet that's not like an old school one, right? These days we use what's called a universal loan or URLA, Universal Residential Loan Application. The VA doesn't necessarily look at what's called debt to income ratios. They look at residual income. So if you go to the VA handbook, right? If you Google VA handbook and go into residual income, basically the VA looks at your net income and they basically take out all your taxes. They factor in some square footage, and whatever you have left over is what you qualify with, right? So some people could have a 70% debt to income ratio and they qualify. Others, depending on their credit, might be able to qualify for less because that's what the VA feels is necessary. Just again, based on the credit profile. If you have recent lates, depending on the credit score, the residual income is that's how you're going to get your approval, right? So those are the moving pieces that happen with that. So it's kind of tough to tell unless someone has a full application and all the financial data to determine like, yes, this is what you can and can't do, right? So kind of your left and right limits on that. So
So,
good question.
Dave, does your organization, like, if you someone contacts you for a schedule 101 and they submit an application to get pre-qualified, and they're like on the cusp, do you offer any suggestions to help? And, if it comes down to credit score or something like that, once you pull that credit report and you're trying to pre-qualify them, does your organization give any feedback on what they can do to get that credit score up, to get some things turned around so they can um, get approved or get pre-qualified?
100%. We have different options, right? So credit, it is a big factor. And I think last time, Dwayne, we talked about it extensively, right? Credit right now is the number one driver to get the best possible deal on a home loan in general, right? You want to be at that 740 or higher when you're doing conventional loans, really 680 or higher on VA and FHA loans to get the best possible deal, right? So a lot of times when you don't qualify for a VA home loan, it's typically a time and credit thing, right? So let's say if you have lates in the last 12 months, it'll be hard to get approved for a VA home loan. Like it's actually not possible because it's there's a whole nother subject in it. But you really want to be 12 months on time with all your bills. Any collections that you have had, they're going to be older than 12 months because you don't want any kind of lates in the last 12 months. Because that's kind of like the big key on that. But yeah, we'll walk them through it. We will make the recommendations to get you to an approvable status. This is why it's important to think, like if you're thinking about buying a home tomorrow, it's kind of too late, right? Because you might get your credit looked at and then it's going to be like, well, most people just don't wake up and say, today is the day I buy a house. You kind of want to plan for that ahead of time. And typically, I would say a safe bet is 6 months to a year out from buying a home. Have your credit ran, like a real credit approval, not a soft pull, none of that stuff, because you can't run the automated systems with soft credit pulls. So a real application, submit all your documents like you're buying a house today. Because for most people, especially if you have a family or if you're moving somewhere, it's a big deal, right? You might be foregoing your lease and now all of a sudden you're in a tight position because you can't buy or whatever the case may be, right? So credit is a big component. It kind of relates on your question. Look at things now so you can be prepared for the future.
Makes total sense. Make total sense. Okay, so we're going to keep going with these questions. Charm says, I'm 90%. I did all the legwork. However, I need another 30 to get at least to 95, which rounds up to 100. I have everything bilateral too. Okay, I don't know if that was a question or a statement, but one of the things I talked about last night on my live stream, my monthly Q&A, we offer an customized educational packet. Okay. And what comes along with that, if you have a copy of your VBA claims folder, VA claims folder, C file, and you need a DBQ and or Nexus, a DBQ and Nexus, we know medical professionals that can complete that for you. Their uh, organization and fees are separate from ours. You have to have that VA claims folder, okay? Because those medical professionals have to have access to the same information as those VA third-party contractors, okay? So if that's what you're saying, you need a DBQ and possibly a Nexus, then shoot me a email and let me know, and then we can go from there. All right. I'm just trying to get to some other questions here, Dave. Okay, here's one.
How do I put my daughter on my VA home loan? If you already have a VA home loan, technically you could just do what's called a quick claim deed. A quick claim deed is where you add somebody onto the title of the property. Now, if it's like you own the property, but you want your daughter to be on the actual mortgage itself because you have a low interest rate, and this is kind of more from an estate planning purposes. And I did kind of read ahead on some of the questions, so I kind of tackled two things in one shot here. All VA home loans, if they were done like after some date, but it was like 30 years ago, so most people don't have those mortgages anymore. They've refinanced out of them. I would say 99% of mortgages are VA home loans are assumable. Okay. An assumable mortgage works in a couple different ways. Either it's a veteran to veteran. So let's say Dwayne has a VA loan. I want to assume his mortgage. We can swap benefits. I could put my benefits on Dwayne's VA home loan. Dwayne's benefits will get freed up, and then he could go buy another property. No issues. Non-veterans can also assume a VA home loan as a primary, a second home, or an investment property. So this is where it really comes in for an estate planning purposes. So Percy, we can go, I'm probably saying more than what you were asking for, but there's just so many things that go with that, right? So if you have a VA home loan and you got a low interest rate, you can't add anybody onto the mortgage itself unless you refinance the home and add them to the property. That's one. But you can have your daughter assume your mortgage as an investment property. Hopefully she still lets you live there. And then you can, then she would own that property at the 2.25% interest rate. You could still live there and you'd still be set. And then afterwards, she can add you back onto the title of the property. If you have, let's say, like where that comes in handy is if you have a service connection that allows you not to pay property taxes, right? That's another pretty big one. You don't need to use a VA loan to get a property tax exemption if you're qualified. You just need to be on the title of your property. This also works the reverse. If you have parents that live with you, they have service connection, and they qualify for the property tax exemption, you just put them on the title of your property and you get the exemption. Right? So there's different ways that you can kind of go through that. But yeah, the VA assumption is awesome. And I think right now, it's a great opportunity, but it is kind of a process. There's pros and cons to it. Like, let's say, like Dwayne, for your example, let's say your place is worth $500,000, but your mortgage balance is $400,000. Well, if I'm assuming your $400,000 loan, I still have to come up with $100,000 cash. Right? So a lot of people will leverage TSP accounts or retirement accounts, money market accounts. They'll just kind of figure it out from with that, because just the amount of interest you save is pretty insane.
Wow.
So I hope, but you can't just I can go down some other rabbit holes, but I mean, because there's different ways that people can apply for the VA home loan, but I can go over that later because I'm sure we got other questions.
Yeah, but Mr. Advisor, if you could click the link in the comment section and maybe schedule a time with David next week, he can get that little one-on-one with you, possibly get some more information and give you some other options as well.
Yeah, because that's the thing. It's like just getting down to like, I just need some details, and then we can go down whatever. It'll make sense.
Right. Okay. Bobby Few said, Had a increase with PTSD. They denied it and said I refused to go to the CMP exam because I already had an actual sufficient DBQ. All right, body fuel. Body fuel. What I've been talking about this, and this is an issue with the VA, and I talked about it last night. This very thing happened to me with one of my claim conditions. My last claim right before it was for increase right before I retired. VA employees, the majority of VA employees are refusing to use veterans DBQs and nexus statements. Now, there's nothing you could do about that when you before you can't do anything about that piece of it. But if they do deny it because you refuse the exam and you go to a high level review, this is the question that veterans are not asking. And I said it last night. You can ask that DRO, decision review officer, why does the VA have DBQs on their website? And veterans, I'm sorry, VA employees are refusing to use it because they'll say, "Oh, we still determined that you needed a CMP exam." Well, what was wrong with my DBQ? Oh, it was some inconsistencies. Okay, we'll point out the inconsistencies. Oh, you're getting hostile on the phone. I'm gonna have to hang up. Now you just called them in a lie. That's all that is. I used to rate, and I talked about it last night. I get a DBQ whenever I got a DBQ and it was good to go. I'm knocking it out. I'm not wasting that veteran's time sending them to that CMP examiner. Now, I'm thinking, is management telling them to do this because those third-party CMP examiners don't get paid for that exam if you don't show up? And also what they're doing, they're like, oh, you don't want to show up? We're going to send it out for an ACE exam, meaning you don't have to show up. But I did a video on my YouTube channel talking about ACE exams because I had a particular client, same condition. They were claiming it secondary, and the VA employee requested an ACE exam. She goes to the high-level review. I gave her the 38 CFR and the M21 manual references stating these are the conditions that are prohibited for ACE exam, and it's all mental. And then the Joe say, well, are you willing to show up for an exam? And she's like, that's the point. What's the point of having DBQs? What are you talking about? And she eventually won a claim. So you can do it, but for whatever reason, some of these VA employees, they went off the rails. I'm sorry. And some of them are not advocates for you, same as these third-party CMP examiners. So I think it's gotten a little bit adversarial, but if they denied for that reason body fuel, they just gave you appeal rights. Okay. All right. Not married and not domestic partnership. Can I add dependent? No, unless you have an adoption in place. Okay. Or what is this? Big time adventures. You stubbed me with this one. I know what that acronym means. Multi unexplained something. It's been a while since I've seen that. Are they hard to rate? No, because you still need an opinion. It falls on the Gulf War undiagnosed illness. Pretty much the same thing. But if you go to the M21 and type in the acronym, more information will come up. But are they hard to rate? No. Similar to other claims, you get a positive opinion, then you go ahead and you grant the benefit. Let's see. I think this one's for you, Dave. Yeah, that's for you.
Can I? Yes, you can. There's only a few places. There's only a few banks that do that. So this is kind of how the program works. It's if you're buying land, it's both a land acquisition and construction loan done at the exact same time based on the regular VA standards, right? So you could do 100% financing, no limit, as long as you qualify and are eligible. Qualifications for construction loans are stricter than a regular loan just because there's a long build time to that. But you can purchase land and build a home. Just note, a lot of times contract, like if you're trying to do a custom home, you do have to have a lot of that work done ahead of time with the blueprints and everything else. So there can be a pretty hefty cost between 20 and 60 grand to do that ahead of time. But some people, that's what they want, right? That's their dream. They're going to do it. They're well qualified. execute. But sometimes people will use like Schumacher or Ryan Homes to build like a one-off home for them, which I actually do see that a lot. Then they have their own blueprints and they have their own basically like homes that are pre-spec'd, and you can just pick out your finishes and then they'll build it, and then they already have all that. So it's definitely possible to do that. If you already own the land, you can also do a construction loan with a VA loan.
Okay. So here's the next one for you. Do you have to be a veteran to assume? And they came in to say on the second round, said a VA home loan. I think you already answered that.
I did, but I want to mention something important. When you are a non-veteran, or if you're a veteran assuming someone else's VA loan and locking their benefits in, that's the key. If Dwayne we didn't swap entitlement, I could assume his loan and lock his benefits into the property, and then he would be locked out of that entitlement moving forward. But I'll kind of give you an update with that. Right now, we have a large generation of baby boomers that were served in the military, right? And what I'm seeing more and more of is I'm seeing veterans willing to walk away from their VA home loans because they're not going to be using them anymore. They're just basically, they're going to, they have enough money and they're going down to Florida. They're going to see you, Dwayne. They're going to see Tampa. It's warm. It's great. Or they're just going to be going to retirement homes. They're just basically they just want to get rid of their properties. But keep in mind that if there's an equity piece that needs to be paid, then you're going to have to, you're going to have to fork that money up. But it's good for people that are cash, that have cash. It's awesome to invest right now, assuming those loans.
Yeah. Okay. Here's the next question. That's for you, Dave.
Big time. All right. We got some good questions. Yes, you can buy a farm residence with a VA home loan. The only tricky component to that is, like, I was talking with a veteran, just did a TAPS class, and they're like, oh, I was trying to buy a house, but it had 360 acres and I couldn't use my VA home loan. And like, it made sense because the land was worth more than the home, right? Typically, you kind of want to be able to split that contract out, just because, yeah, if you're trying to buy something that's, not regular in the area on top of that, you're just going to run into issues. But you definitely can buy a farm residence. But some people will buy like 50 acres of land. Like, I've seen that not too long ago. Someone bought 50 acres of land. They had a whole bunch of, the whole property was basically farmland. And the neighbor was renting out and paying them rent for that land, which was great, but they couldn't use that rent to qualify for the mortgage, but they could still rent it out. So they had a free mortgage because the land was producing enough revenue to pay the mortgage.
Wow. Okay.
So that's cool. Unless you want to use the land. Not cool.
Yeah. All right. That's for you, Dave.
Yeah, it's a good question. So if you pass away, your children cannot assume that loan. They're going to have to refinance out of it. That's why I said doing the assumption. I mean, if they're on the title of the property. So, okay, this is kind of a tricky situation. I'm going to kind of explain from like overview, and then I'm going to dive into that question. When you buy a property with a VA home loan, either it's a veteran by themselves, pretty easy. Veteran and a spouse buy together. Even if spouse is not on the mortgage, they can be on the title, right? So that's pretty easy. Two veterans buy, both people are on title, both people are on the mortgage. Veteran, non-veteran, they can also buy together, be on the mortgage, and be on the title, right? So that's how it works from a buying perspective. And who has the entitlement to the loan. The challenge comes in is that you can't just add a fiance to title at closing when you buy. You can't add a child onto the title at the time that you buy. But you can do what's called a quitclaim deed after you've become the homeowner of the property, to add that child onto the property, like to the title of the property, so they have legal rights in the property itself. Okay? The loan itself is tied to the veteran. So I'm not sure exactly how that would work when, let's say, if somebody's spouse or a child on title, VA home loan is yours. They're going to basically force that child to refinance that home into current market rates, unless they assume your mortgage as an investment property. They take title and ownership of that property. Then they own it at your current interest rate, and you can then do it. And like I said, then they can quick claim you back onto the title, and then if you have an disability exemption, that they can go down that route. So I hope that answered it, because this stuff is pretty technical in that sense.
Yeah. Okay, so we had 70 people joining us this evening. Someone let me know how many likes we got so far. Definitely appreciate it. Patricia Lowry, good information. Thank you. And this is for you, Dave.
Oh, yeah. So this is a good one. I think this one is that a lot of people are struggling with that are current homeowners, right? They want to cash out, refinance their home, or they want to pull equity out of their property, but they have super low interest rates. So there's a couple things that you can do, and there's always ways to get money. It just depends on how much that money is going to cost. So you do have the option of keeping your current VA home loan at your first mortgage. You can get a second mortgage. You can get a second mortgage for whatever amount you need. Yes, it's going to have higher interest rates, but you're going to still keep your first mortgage at the lower rate. HELOCs are like variable interest rate mortgages, right? So there'll be like a 30-year mortgage. It'll be variable for the first 10 years. It'll go up and down, but you just basically, it's like a checkbook, right? You have $100,000 line of credit. You need $500. You write a check for $500. You pay interest on $500. You need $10,000 the next month. Then you're going to have a balance of $10,500 and so on, right? And you could pay the money down and up, and then you have that line of credit of $100,000. So that might be a way to be able to do that. There's also option of getting personal loans. There's definitely some personal loans out there with good interest rates, which kind of are better than HELOCs, just depending on how much money you need. But that is a struggle that people face right now. Hey, I got a low interest rate. Don't refinance. Just get a second mortgage. Depending on how much equity you have in the property, it's going to dictate what your rate's going to be, along with your credit score. Typically, HELOCs and HE loans, it's a fixed second mortgage, are going to have higher credit requirements, typically 680 or higher, 700 or higher, and a primary residence. Typically, they won't do investment properties or second homes or multi-units. It's primarily single-family townhomes and condos. But you can definitely, you can find someone to lend you money. The thing is going to be how much it's going to cost you. And that's what you always have to be very careful of and take a look at when you're looking at lender fees.
Okay. Good information. Thank you both. Definitely appreciate it. Son Lee, I put it in the comment section. Let me know if you saw it. Mr. Kimball was passionate on his live last night from what I watched. Because I was talking about some things that I saw when I worked in the VA. And I try not to focus on those or talk about them too much in my live streams because I don't want people to get fixated on them, but stay on the task at hand, because those negative attitudes within the VA, those VA employees, there's nothing that we can do about it. We still have to follow the regulations. And as long as we follow those regulations, you're going to eventually win, because it's going to land on somebody's desk that is an advocate for you. And even my book, VA Claim Success, I'm giving you the blueprint. I rated, was trained by the VA. Okay, I know this process. My staff and I are all retired raters, and we adjudicated our own claims. Okay, and it's harder for VA employees than non-VA employees. Okay. Been out 13 years, diagnosed with plantar fasciitis. Okay, so you got to look at the 5 ways of service connection. Where does that plantar fasciitis fall under the 5 ways of service connection? If it doesn't fall under one of the 5 ways of service connection, it's going to be denied. And I talk about that 5 ways of service connection in my book, and I've done videos on it. Okay, I have over 400. I got about 350 videos and 60 live streams where I'm talking about this stuff. Okay, so you got to make sure you go out to my channel and look at some of those videos, especially the 5 ways of service connection. Or wait till I have more medical evidence. The regulation is if you're claiming on direct service connection, they're going to look at your medical records from active duty. Was there treatment, complaint, diagnosis, injury, or disease for that plantar fasciitis? If it's not, denied on direct service connection. But it could be if you're service connected for a back condition, you can claim it secondary. But then you're going to need a medical, a C&P exam, or you can go get a DBQ and a nexus statement. Can you get P&T even if you check the TDIU box? There's no TDIU box. 8940, that's the claim form for TDIU, okay? But if you're TDIU, you can be permanent total or just permanent total, period, okay? One RoboDog, thank you. Definitely appreciate you guys and women. Trying to get through these here real quick, Dave. I had a high-level review for breathing problem. What was the diagnosis? What was that? My claim was for asthma attack in boot camp. Okay. I guess I should have read that before I started. I was told that I have asthma on my entrance exam. Okay. So if you have asthma on your entrance exam, I talked about it last night. One of the 5 ways of service connection, pre-service aggravation. I am claiming asthma as pre-service aggravation. My military service aggravated my pre-diagnosis of asthma. So that doctor has to give a pre-service aggravation medical opinion. Okay? Ray says VA is getting wild because vets are no longer getting mad. They are getting educated. There it is. And they know that it's coming. Can you ever get a VA? Oh, that's for you, Dave. I'm sorry.
Oh, yeah. So, Jennifer, that's a good question because I also wanted to do the same thing. I wanted to build a place on my own using the VA home loan. But it's really, it's kind of it's tricky because the lender takes on high risk when they do these types of financing because it's 100% financing, right? So they typically want to have an experienced builder that will do them. And there's only a handful of banks that I know of that do VA construction, like real construction loans, right? Like from the ground up, you're paying for all yourself. They will require you to have a builder. All the ones that I know will require a builder. If you want to go down the route of GCing a project on your own and not being licensed, you can definitely do that. That's the route I had to go for my home build. But it does require a hefty down payment. I'll be honest with you. That's a huge downside to it. Typically, it's 20 to 25% down payment based on market value of a builder doing it. Even if you could save yourself a bunch of money, it doesn't make a difference. What's going to happen is you're going to go for the max, and they're going to give you a credit at the end of your mortgage, at the end of your construction loan, and just give you a principal reduction for that amount. So just kind of be aware of that. But if you got a cousin Vinny, that's a contractor, and they're licensed, it is pretty easy to get. It is actually pretty easy to get on the VA contractor list, approved list. It's like you need workers' comp, $1 million in insurance coverage. Like there's a couple things like majority of contractors can get on that list. So that could be a way that you can do that.
Okay. Next one is for you, Dave.
I'm interested in buying an investment property with VA FHA loan. Can I buy it through a trust with an FHA loan, or should I put it in the trust after? So this leads me. I'm gonna take this. I'm gonna go two ways. One, VA loans. There's no minimum time requirement to live in them. You live in one day, it doesn't make a difference. That's the way the loan is designed. Most people tell you that VA loans, you have to live in a property for a minimum of a year. That is not true. That is an FHA requirement. Okay, VA loans, you can use them as an investment vehicle. And maybe next time we can do a whole like Q&A around using the VA loan as an investment vehicle. I see a lot of people do stuff on YouTube, and I'm like, it doesn't even make sense what they're telling you. We're going to walk you through how to actually do it. There's all different types of like theories and misconceptions people have that are just not going to work, but we can walk you through on how that can work. Now, an FHA loan is designed to be a primary residence, right? If you're solely buying it and your financial situation warrants that it's an investment property, then you won't be able to do an FHA loan. If you're intending to buy it and live in it for a year, because that is the requirement for FHA, unless you have extraordinary circumstances that would allow you to not do that. That's one thing. Two, you cannot put government loans into trusts. And let's say you do that. You put it in a trust or LLC like that. You hear all these people say that you can do. If they find out about it, you sign an alienation clause and an acceleration clause at closing. Meaning if they find out, they can call your mortgage due in 30 days. Like they find out, hey, your mortgage is due in 30 days. Otherwise, they foreclose on you. And you won't, I don't even know how people get out of it. They'll probably be like, oh, I'm going to reverse it. I don't know how that would work, but you just have to be very wary of that. The only loans you can do in a trust, and then that's limited, like a living trust, is conventional loans, and only certain lenders will touch them. And it depends on your state and what they allow. I know that was a lengthy question, but it's kind of like, yeah.
Now, you can still quick deed it, can you? If it's a VA home loan, can you quick deed it?
I would talk to an attorney,
Yeah,
but you can do it. I don't think that's as big of a deal. Again, I'm not a licensed attorney,
yeah,
but it is something I see people do often because it's the mortgage is the important part for that. I would
yeah.
think, right? But we see that all the time. Like people get quick claimed onto VA home loans, but if you're trying to quick claim a property into an LLC, that's just red flags. Because like, I'll give you an example. When you quick claim somebody on a mortgage, nothing really happens. Oh, they have vested interest in the property. Okay, they're going to get a tax exemption. Great. But when you switch a property to a LLC, you change the name of the owner.
Mhm.
So now the mortgage company is going to be notified that this has been moved into an LLC. Two, you have to get business insurance. Now you're calling your lender saying, hey, guys, now this is owned by a company, David LLC. Now I updated my insurance. So it's just causing, more and more red flags versus like adding somebody the quick claim where it's just like, I'm not updating anything. You're not even updating insurance. I mean, if you get a property tax waiver on the property, yes, you're going to have to submit that to the lender. If you want your mortgage payment to reflect no property taxes, then you submit it to them.
Yeah.
Then they'll see it. But again, that's not as big deal if you're trying to switch it to a company. That's where that's where all the red flags come up.
And when I was putting together my trust, that's what my lawyer said. He was like, hey, you don't want to put your home in this trust, because if you do, what you said that loan could possibly come due if they find out. And two, you could lose your tax exemption if you get that veteran no property tax. So yeah, definitely consult with your lawyer.
And that's a good point on that. It has to be a primary residence and you have to be on title, right? Like you said, when it moves to a trust or a business or something else, guess what? You are technically not the owner, so you don't get the exemption.
Yeah. Service connection for bilateral bunions. I have since been diagnosed with flat feet. Is there a connection for a claim? I also have been diagnosed with osteoarthritis in my toes. Basically, does bunions cause flat feet? I have done research. Thanks. Patricia, I'm not a medical professional. I can't say that it does. But a lot of veterans, they'll say, "Hey, Dwayne, I'm service connected for my knee. I'm service connected for my back, and I'm going to claim arthritis." That is not a separate percentage. Okay, it is not. They're going to take that as a claim for increase. So you can't have like bunions and then turn around and claim osteoarthritis in that same toe, as they're going to look at it as an increase. Okay, is a medical opinion the same as a nexus? Good question, Jennifer. A nexus, this is what a nexus consists of: the date, veteran's name, veteran social security number, diagnosis, evidence reviewed, medical opinion. Is it less likely or least likely is not a rationale, how the doctor came up with that opinion, and the doctor's information? That all goes into a nexus. Okay. So it's just not the medical opinion. But also, if you get a DBQ completed, all that information is in the DBQ except the medical opinion and rationale. Unless the doctor puts the medical opinion and rationale in the remarks section of the DBQ, you can do it. I did it with one of my claims. Some DBQs have small remark sections. So I would say do it a separate attachment on the doctor's letterhead and just say, nexus statement. And then word it that way. Even in my book, I give you some examples, Jennifer, of what a nexus statement looks like, what a medical opinion and rationale looks like. Okay. In my book, I typed up examples. Okay. That information is in there. Dino girl, this is what I was talking about, David. Lives in Texas. She's still trying to get that property. I think in Louisiana, I believe, if I'm not mistaken. Okay. So yeah, we're waiting on you, Dino girl, to get that investment property. I received 100% permanent total for PTSD secondary to breathing problems. Should I have received aid and attendance because of evidence CMP examiners included? I don't know. I haven't looked at any of that information, but I can tell you this: for SMC, which is special monthly compensation, SMCL, which is aid and attendance, go to the M21 manual reference. That's going to be easier than trying to find the 38 CFR. Do you meet the criteria? Do you meet the criteria for that SMCL? You have to look that information up. I don't know because I'm not looking at any of your information. I don't know what the criteria is for the questions as it pertains to you on the 2680, on the housebound and aid and attendance form. Okay. But I will tell you this: it has to be, any SMC has to be due to a service connected condition. I had a veteran call me about a year and a half ago, and he says he didn't like my answer. Basically, he's like, "Hey, the VBA has denied my claim for aid and attendance. I had my 2680 filled out by my primary care at the VA, and they got 25 years of medical experience." And I asked him, I said, "Well, what conditions pollute or cause you to have or need for aid and attendance?" And he named them. I said, "Now, are all of those conditions you're service connected for?" He said, "No." I told him I would deny the claim too, because they have to be due to service connected conditions, not conditions that you are not service connected for. He got upset. Well, why should I trust you? Because you've been denied 4 times. And I'm telling you, it's based off of regulation, and clearly you don't meet that criteria. Scrap Guy, formerly known as Gun Guy, how we doing? And this is for you, Dave.
I imagine the promissory note was most important. I think it may have been a typo on that.
Yeah, I think promissory note.
Yeah, the promissory note is like the most important part, was like promise to repay the mortgage. So with a quick claim deed, that's not going to change who's responsible for the mortgage. That's what I was mentioning earlier. If you put your daughter on the title, she's not getting the VA home loan, right? They would have to either do a joint home loan application, refinance to do something like that. But some of this stuff just won't make sense. It's better for them just to assume it is the best way. To be honest with you, block out your benefits, have them assume your mortgage, ask them nicely to stay in your own home, and then add you back onto the title and get your exemption for the taxes and just live it out and structure the vesting of the title. People don't like doing. I've just come across a lot of weird stuff recently where people add relatives onto mortgages for whatever reason, right? They add them to the title. Understand how vesting works. Sometimes one meaning in a different state will mean something else, right? In Illinois, if you're, let's say, husband and wife, you always take tenants by the entirety, meaning that if something happens to you, your half of the loan passes on to the next person. You avoid the whole estate issue. If you're tenants in common and you have 5 people on there, as people die off, the other person just takes up all that. Absorbs all those percentages of ownership down to one person, and then they can pass it on whoever they want. Sometimes they'll split it up like tenants in common. There's another one where they'll basically say, oh, one person, when you go in together, it's 50-50, so you could pass your 50% off to another heir. So you really have to be careful on how you take title to a property.
Good. Okay, we got about 4 minutes left.
Yeah.
Right, DK, Louisiana. Okay, we waiting. My husband just had his VA appeal board hearing, and we're going to get a new DBQ for his Parkinson's as service-connected diagnosis. There are many things associated with Parkinson's. Is a DBQ example in your book? No. The reason why, Jennifer, Parkinson's disease is probably the second hardest condition to rate. And here's why: because Parkinson's have so many secondary conditions: slurred speech, paralysis of the face, and you have to grant right side, left side, depression, stoop posture, shuffling of the feet, nerve damage of the upper and lower extremities that affect the median nerve in the upper extremities, and the peripheral, femoral, and sciatic nerve in the lower extremities. So you may have, when you get service connected for Parkinson's, they'll give you Parkinson's at 40% with the highest secondary condition. And then they go down and do secondary after that. Those are pretty hard. It's just not one DBQ. I think on the average, I think the not last, but one of the Parkinson's ratings that I completed, it had 10 DBQs. 10. And it took some time, because not only am I saying, can I service connect, it's the percentage, with a percentage for each one, and the effective date. Those take time. Okay. But I'm not saying you can't get it. But again, Parkinson's, how did you claim it? Where does it fall on the 5 ways of service connection? You normally see Parkinson's Vietnam vets, Agent Orange exposure. By many things, I mean multi symptoms. Yeah. So again, that falls under undiagnosed, falls under Gulf War. I'm sorry. Do you discuss obesity and intermediate step in your book? No, I do not. But I've never actually rated one of those, but I've seen it. Seeking to use it for sleep apnea, secondary PTSD with obesity and intermediate step prescribed. So, Ray, again, if you opt into our customized educational packet, we do know a medical professional, doctor. He specializes in doing those DBQs with that step. Okay. Okay, I'm just trying to see if we got any more home loans. Bilateral plantar fasciitis and bone spurs in my heels, and had surgery last December. I was denied a few months ago, and is not service connected. Any advice moving forward? Where does it fall under the 5 ways of service connection? Either you can get the book, I explain the 5 ways of service connection, or you can watch some videos on my channel. So plantar fasciitis is not, I got a diagnosis at the VHA hospital. Let me go on VBA and file a claim, and it doesn't fall under the 5 ways to service connection, denied. Okay. So where does it fall? Jay, where does it fall under the 5 ways to service connection? Dave, X and I are no longer together. Can I get my name? Oh, that's for you, Dave.
Yes, you can, Ray. But the way you do it, it's slipping my mind right now. If you schedule an appointment with me, I could just walk you through it. I have like a PowerPoint. It's just like they just call it's something that it's not hard to do. It's pretty straightforward. But yeah, Ray, definitely hit me up because I'm having a brain fart on that. Hit me up and like that's a quick we'll have a 5-minute conversation. We'll go through it and I'll answer it.
I started reading that and I said, Dave. And I was like, wait a minute, his name is Ray. I'm like, that's for Dave.
Yeah.
Also, Ray, I put David's calendar link. I've been putting it in the comment section. So we're gonna just take a quick couple more, if you don't mind, David, because we're already at the hour. Good evening, fellows. Dwayne, I'm living with my oldest, homeless. How do I apply to get fast track my claim? Okay, actually, I did a video on this, Grace. How to expedite your claim. You have to let them know that you're homeless. Okay. There is certain criteria. I can't think of that criteria right off the top of my head. But if you go to the M21 manual reference and do a search for homeless, they can flag your claim. Guess what? I have a video on my YouTube channel explaining how to use the M21 manual reference. Will I get anything for sleep apnea if I already have 70% for insomnia disorder? Insomnia disorder falls under mental. Sleep apnea falls under respiratory. 2 different body systems there. Thank you. Definitely, you're welcome.
Yeah, thank you, Ray.
Jay Free, is a nexus letter needed to make a secondary claim 25 years later? You got to finish the question. You're going to need a DBQ, just not the nexus. You're claiming something secondary, you're going to need a DBQ and a nexus statement. I received 100% employee bill last December. Is that static? Okay, go back and look at that rating decision. Did they schedule a routine future, or did they give you Chapter 35, which means you're permanent in total, aka static? Okay, it's you, Dave.
No. So you can't. It's land in a camping trailer. That is a good question because I do get that a lot, and that is like one of my dreams as well. But to be honest with you, but no, to buy land, you can't use a V loan just to buy land. So kind of keep that in mind. You typically will go to like a credit union, 25% down payment. That's typical. But you would have to put on to get a construction loan, you would have to get real property, meaning it's fixed to the foundation. It could be a modular home, a double wide, single wide, but I think it has to be a minimum of a double wide. But you'd have to just hit me up, then I'll confirm it. But it has to be affixed to the ground. That's the only way. Camper is on wheels, so you can take it away.
Okay. All right. So everyone, we'll go ahead and we'll wrap it up.
Got
a lot of thank yous and very helpful. And we definitely really appreciate it. And also, a lot of you, I can see a lot of you chiming in from my YouTube channel. Dave has a YouTube channel as well, VA Housing Education. Go out there, subscribe to his channel. Also, if you're on LinkedIn, follow us on LinkedIn. Okay. I did get with my assistant earlier. I'm like, hey, we need to get, these up a couple of days prior so people will know that we're going to go live. But follow us. So as we do events, you will be notified. Okay. You will be notified. I get a lot of emails. Dwayne, what's the link? Well, follow us and you get that notification. Again, this is free information. Dave, you can just tell by the way he answers these questions. I'm like, okay, you just got to schedule. You got to schedule time to talk with him because he's a wealth, plethora of knowledge. So definitely, whether it be the compensation side or Dave talking about VA home loans, you got to get educated on this stuff because things change, especially within the VA. But you heard Dave talked about that court case. That's outside of the VA, but still information that you want to know, because you go out and get a real estate agent and they start talking about this stuff. You might want to be like, you know what? Wait a minute. Let's connect in a couple of days. I got to talk with Dave first. So, Dave, I'll go ahead and give you the last word. Then we'll go ahead and we'll wrap it up.
Well, thanks everybody for joining us. Never disqualify yourself from getting a VA home loan. Talk with the professionals. Schedule a call with me. Happy to break it down. I hope you guys have a good week and a great weekend, and we'll talk soon.
All right, everybody. Take care and enjoy the rest of the evening, and be safe.